the key thing right now is that we are seeing that the value stocks are certainly quite interesting right now, particularly if you look around the world, while COVID cases in some of the European countries or even in India has been at all-time high. I mean, if you look at some of the resurgence in European countries, that certainly is cause for concern. But however, if you look into some of the Asian space, and in fact, even in US, the financial sectors, I believe, will be part of these value stocks that we are looking at in line with the recovery from the pandemic. So it's not just Tanvia, the financial stocks. We're also looking very closely at some of the other value stocks that's linked to the consumer goods sector, that's linked to the materials and even industrial. So I think that at least for the medium to a longer term, some of these sectors are showing us good opportunities for investors to move in.
Yeah, absolutely. And you could be contrarian in this market in looking at a beaten down sector if you think that the growth outlook is picking up or is improving. So that could be your take. But if you are looking at buying at the lows, you're also advocating from a long-term investment horizon to look at energy. And I wonder what's driving your conviction there?
Well, energy will, in this case, compared to some of the other sectors that we are positive in, which is financials, materials, industrials, will take a longer time. I mean, right now we have seen year to date, the energy stocks hasn't been seeing much sunlight already. However, we think that the energy space at the end of the day, as we move towards the middle part of the business cycle, I think things will be looking brighter. Next year, we're going to see worldwide quite a big economic recovery, and that's on a year-on-year basis. Although it hasn't reached the economic levels before the pandemic, but I believe that this stronger push in economic recovery from 2021 onwards, particularly from the second quarter onwards, will increase some of the expected demand for energy, for oil, for petroleum. So I think right now is a good time for us to get in terms of the valuations of some of these energy plays into position for the next 2 to 3 years. So at the end of the day, we are advocating to our clients that don't buy energy stocks, don't buy financial stocks if you're thinking of getting a profit next month. Now that is really out of the question, out of the window. We are going to be in the medium-term investment space, and what it means is that you're going to hold on to energy stocks, you're going to hold on to value stocks. That should be something like a time horizon of around 2 years and above.
Yeah, it always comes down to your personal time horizon, doesn't it, Francis?
That's
We've been
right.
talking a lot today about the deal between SK Hynix and Intel and the shuffling of the leaderboard here in Asia within the chip space. What do you think about semiconductors in Asia as a result?
We have seen the tensions between US and China. That's not just in the trade space, not just in the political space, but even now so is in the technology space. We have seen so much news about how the US is slowing down or stopping Chinese technology from exporting to the US or to the other parts of the world. Now, I guess because of this tension between the US and China, we are likely to see that the Chinese is going to be a lot more self-sufficient in the semiconductor space. And we are seeing that some of the merger we're talking about, the acquisition we're going to talk about today, I think that is part of a concentration or a restructuring of how Asia is going to be very important in the semiconductors manufacturing and import-export space in the future. So I'm seeing China having self-sufficiency in semiconductor manufacturing. I'm seeing a shift towards North Asia. So in this case, we are overweight, in fact, on the semiconductor names in North Asia. You mentioned just now SK Hynix. We are looking quite brightly in terms of Samsung as well. And in fact, from Japan, we like Sony a lot as well.